Joe Biden and his pet central banker have teamed up to drain almost 1/4 of the average American's retirement account in just 2.5 short years, according to a new study by the Committee to Unleash Prosperity. That's enough to take the average American's IRA down by $30,000 in buying power, and it's enough to take a prudent retirement, say $800,000, which would provide a $40,000 income, down by a cool $200,000. The study found the gap is large enough to delay millions of Americans' retirement for years. In fact, my friend E.J. Antoni estimates up to a decade longer of work. So how did Brandon and Jerome manage to piss away 1/4 of the nation's retirement savings in less time than it takes to grow a fruit tree? Easy. Inflation followed by Jerome's panic interest rate hikes to swallow the spider to catch the fly. The panic hikes hit both stocks and bonds last year, which was a 1-2 punch that hits only once in a blue moon. That matters because stocks and bonds make up almost the entirety of Americans' retirement savings, and the bonds are supposed to hedge the stocks. So when one zigs, the other zags. Alas, 2022 was Joe and Jerome's perfect storm. In fact, it was the worst year for bonds since at least 1928. This alone knocked out 13% of the average retirement account, so about $17,000. $1 trillion gone in the twinkle of Joe Biden's beady little Fed appointments. The fun did not stop there as inflation went to work on what's next, diluting it like water into wine. So even if your retirement account miraculously showed a gain, it doesn't buy nearly what it used to. So inflation took out another $16,200 of the average retirement account, bringing the total savagery to $33,200, or about 25% of the starting balance on the average American's retirement. Keep in mind, Americans did not save that much to begin with. We haven't really saved since Nixon broke the gold standard, and Biden and Powell just lopped off 1/4. For those following along at home, Mr. Biden did inherit an economy that was poised to soar after the great COVID shot in the foot, and one with inflation crawling along at just 1.4%. And then he turned that into the fastest retirement drain in a generation. So what's next? Brought to you by Unchained.com. Even as our retirement savings melt away, a recent Senate analysis found that average Americans have to pay $11,400 more than when Biden took office. Again, coming from both inflation and from higher borrowing costs, thanks to those Fed hikes. To make ends meet, Americans are racking up record credit card debt, borrowing against their remaining retirement accounts, and buy now, pay later is soaring 14% on the year alone. Add in Washington's black hole of debt, up $2.5 trillion in just the past 6 months, and the entire economy is running on debt coming straight out of your retirement. A fresh episode of the podcast just dropped. Check it out at peterstonge.com. Okay, we'll be watching. See you next time.